Hi, I'm Peter Tyndale, President of Automated Accounting Solutions, and I've put together this webinar, How to Avoid 5 Common Small Business Accounting Mistakes. This webinar will probably run about 20 minutes, so bear with me. Let's get started. I've been an accountant for my entire professional career. It's the only job I've had. On screen you'll see several senior positions I've held over the years, and I'm currently the president of a firm that provides accounting, bookkeeping, tax, and business consulting services to small to medium-sized businesses. We do provide top quality service to small business clients, and here are a few testimonials on screen, and if you visit our website there'll be several other testimonials from other satisfied customers. Our mission is to provide the highest quality of accounting, bookkeeping, tax, and business consulting services that consistently exceed our clients' expectations. And these are not simply nice sounding words that we've strung together, but this is a creed that we live by. Customer service is paramount to us, and we pride ourselves on being very responsive to our clients. We respond to our customers by way of email, phone calls, or text message within 2 hours. Are you in the right webinar? If you operate a small business, if you manage a day-to-day accounting and finances for that small business, and you have no formal accounting or finance training, then you are in the right place. And if you stay until the end of the session, we'll provide you with a copy of the slide presentation, How to Avoid 5 Common Small Business Accounting Mistakes, so you can address the issues within your own small business to make sure that you're not running afoul of these 5 common mistakes. Let's start at the beginning. You're passionate about your business, but you weren't trained in accounting, and it's taking time away from building your business. Your core functions that you've started this business for is not currently being addressed. You're having to juggle competing priorities, trying to market your business, run your business, and do the accounting at the same time. That can have consequences. You will likely lose time because you're so busy trying to do everything for the business. You're juggling and performing all the tasks. You'll lose money by way of potentially lost revenue from sales that you should have been pursuing instead of trying to be the jack of all trades. And by not having a good handle on the financial affairs of your business, it will likely lead to inadequate tracking and recording of revenues and expenses that leads to incorrect business decisions. The Small Business Association states that 30% of new businesses fail in the first 2 years, and that number jumps to 50% during the first 5 years. And I'm certainly not saying that these 5 common mistakes are the sole reason why businesses will likely fail, but they are definitely contributing factors. So these 5 common mistakes are: 1, not having an operating budget for your business, not undertaking any cash flow management, this poor record keeping, delayed financial reporting, and a lack of use or knowledge of accounting software. And these 5 common mistakes can make the difference between thriving and barely surviving. No operating budget. While this is not the end of the world, if you don't have an operating budget, I'll show you an alternative a few slides down. But as the old adage says, if you fail to plan, then plan to fail. And when you start a business, the resources are likely limited. So it's important that as a business owner, you're able to track where all your dollars are being spent and account for all the money that's coming in, all the sales revenue. So here are a few budgeting tips should you undertake a budget preparation process. You start with last year's profit and loss statement as your base year. I recommend using scenario planning where you have a best case and worst case scenario. You would want to include a budget narrative that captures the assumptions that you've included in your budget numbers. Building in a 5% contingency or wiggle room is beneficial for those unexpected expenses that are likely to pop up throughout the year, and that budget should be reviewed at the very least on a monthly budget and compared against the actual expenditures monthly. No cash flow management. And your cash flow is simply accounting for money that's coming in and money that's going out. If the funds going out exceed the funds coming in, you're likely to be in a deficit position and will be in need of some outside resources or additional resources to cover a shortfall. And the Small Business Association again says that inadequate cash reserves is the top reason startups don't succeed. It's simply called running out of money. So here are a few cash management tips that will help avoid that process. Take advantage of extended supplier payment terms. If your creditor gives you 10, 15, 30 days to pay an invoice, you should definitely take advantage of those payment terms and pay at the last possible moment, but not pay your bills late. Your bank account should be monitored at the very least on a weekly basis, and depending on the severity of your cash position, possibly monitored on a daily basis. Now, unlike your suppliers that you'll take advantage of their payment terms, you should encourage your clients to pay you faster. For the clients that I have who I send out their sales invoices, those invoices are sent out and they're due on receipt. There are no lengthy payment terms attached to those invoices. And securing a line of credit or have credit available as a backup option is an alternative to stop any cash shortfalls. Now, I mentioned earlier the tool that I would provide you with. This is a cash forecast, a cash flow forecast. And I treat this as an alternative to the budgeting process, and it can be started at any point during the year. It doesn't have to be started at the beginning of the year. In the example here, it so happens to start in January, and on your screen you can see where the opening cash position in January is $10,000. The sales revenue budgeted are expected to be at $8,000 for combined cash receipts for that month of $18,000. The budgeted expenses for the month of January total $15,755, and the difference between my total cash receipts and the total cash disbursements is $22.45, and this ending cash position becomes my starting position for the month of February. And as you can see on this document, for the month of April and May, Peachy Productions LLC will be in the red. They will not have sufficient resources to cover their expenses. So they have three possible options. Increase the revenue for months that there will be a shortfall. 2, eliminate or delay expenses for those 2 months to the tune of $21.70 and $34.75. 3rd, utilize a credit card or some other financing alternative to cover the shortfall for those months. And for the months of October, November, December, which represents the last quarter of the year, the cash position is fairly healthy. And this is when I would sit down with my clients and recommend or look at possible expenditures that they may have delayed, capital equipment financing and purchasing that they may need to make. Poor record keeping. There's so many times I've got clients that have greeted me with a stack of receipts very similar to the image on the screen, and it's a pretty challenging exercise excuse me, to have to go through all these mountain of receipts and to make somewhat sense of their accounting records. As an alternative to the stack of receipts, I recommend, if you do keep receipts, store them at least in chronological order. And as an alternative, utilizing a credit card for all business-related purchases allows you to capture all your expenses for the business in one place that will appear on your bank statement. I recommend minimizing or eliminating the use of petty cash. That is always a problematic area. It is very difficult to track and keep the receipts supporting expenditures, and establishing a document retention policy will eliminate the need for you to keep years and years of unnecessary paperwork. There's some documents that you will keep for perpetuity, such as your articles of incorporation, but there's no reason why you need to keep cancel checks going back 7, 8, 9 years. 3 to 5 years is the standard time that you should retain documents. Delayed financial reporting. One of the basic precepts of accounting is for information to be effective, it has to be timely. Reviewing data at 6 months old and making a decision based on that data is not a very efficient way to run your business. You need to know what's going on, what direction your business is going. Is it succeeding? Is it doing well? Are you losing money? And a few reporting tips I recommend. Your profit and loss statement should be prepared on a monthly basis. Those expenses reflected on a profit and loss statement should be monitored line by line to identify any anomalies or discrepancies. Your bank account should be reconciled monthly, and you should save time by replacing Excel spreadsheets with some type of accounting software. It'll help make your life a whole lot simpler. And lack of knowledge of accounting software is our last common mistake. And a few tips. Do not rely exclusively on manual Excel spreadsheets. They can be fraught with errors, especially as you develop more complex spreadsheets, adding columns, adding rows, putting formulas in. It can become pretty unwieldy. You should research software packages and take advantage of free trial offers that are out there. QuickBooks is a very popular alternative. It's a very robust product. While I'm not endorsing QuickBooks per se, it is a very popular software package that many of my clients use. You should set up your chart of accounts on software utilizing expense codes that are specific to your organization. If you are, for example, a media company, you would not set up a construction-related expense account in your chart of accounts. And take advantage of any low-cost or free software courses that are available out there. So just to recap, 5 common accounting mistakes are: 1. Operating without a budget for your organization, not having any cash flow management in place, poor, ineffective record keeping, which often results in delayed financial reporting, and the 5th common mistake is lack of use or knowledge of accounting software. Worst case, not using any accounting software at all. And these common accounting mistakes can definitely prevent the future for your business. You want to ensure that those 5 areas are addressed so you can save time, you can save money, and you can focus on growing your business. That's why you became a business owner, not to become an accountant, unless you're in the business of accounting. And if you are, you would not be watching this webinar. So, if you have any questions based on any presentations that you've seen in this webinar, I do offer free consultation to the first 15 people that call in. It's a $75 value. It's a no obligation call. You will not be hit with a hard sales pitch or a sales pitch of any type. I'm just making myself available to thank you for having viewed this webinar. And I'll take the time now to take just about 3 or 4 questions if I have time. Again, I'm trying to limit this webinar to just 20 minutes, so let's get to it. Raheem from Florida has a question. He says, this is a sales tax question. Do I have to charge sales tax for every state where I ship my products to? Well, Raheem, I didn't cover sales tax in this webinar, but nonetheless, I will address it. Sales tax across states is a complex issue. If you reside in the state of Florida, you will charge sales tax to the customers that purchase in your state. If you ship to other states, you do not have an obligation to charge sales tax unless you have what's called nexus within that state. So if, for example, you utilize a fulfillment house in the state of Georgia, all your products are shipped out of Georgia. To any customers who purchase in that state, you would require to register with the state of Georgia and charge and file sales taxes because you have what's called nexus in that state. Hope that answered your question, though sales tax wasn't specifically covered in this webinar. And we have John from New Jersey. Do you recommend that I use QuickBooks? While I'm not endorsing, as I said earlier, any product, QuickBooks is a great product, and because of its popularity, there are several other third-party products that interface very well with that software. You can download your banking activity, for example, directly into QuickBooks. You can also download your merchant card processing statements directly into QuickBooks. But regardless of what you use, what software you use, you should definitely be using some kind of electronic software package and not trying to do this the old-fashioned way, utilizing Excel spreadsheets. And one more question. Beth from Delaware. I recently started my business and I've been doing my own accounting so far. At what point should I involve an accountant? Beth, the small business experts will tell you that when you start in a business, there are 2 professionals you should utilize at the start of this process. One is an attorney who will likely help with the incorporation process. 2, your accountant, who will ensure that he or she sets up a system that will allow you to track your revenues and expenses, provide a profit and loss statement so you can see exactly what direction your business. Are you growing? Are you doing well? What products aren't doing well? What product lines should I drop? Which ones are being profitable? So utilizing an accountant, at the end of the day, it's a personal decision. I believe in letting the experts do what the experts do best. Quick example, I undertook the process once to change a pipe under my sink. 2 hours later, 4 visits to Home Depot, I barely had the job completed, and I ultimately had to call in a plumber to finish it off. Now, had I called a plumber, the expert in the first place, he would have completed a task in possibly under 10 minutes. So, not utilizing someone who does this for a living can set you back. In this case, if you're not an accountant, it's always best to hire an expert to let them do what they do best. So that concludes the webinar. Thanks again for listening. If you have any questions, please visit my website. On the bottom left-hand corner, myautomatedaccountant.com. Send me an email at peter@myautomatedaccountant.com or call for your free 30-minute consultation at 732-447-9733. Thank you for listening.